Hello. We are going to begin our first reading, and it is a Medium article by Arthur Hayes, titled Speechless. Any views expressed in the below are the personal views of the author and should not form the basis for making investment decisions nor be construed as a recommendation or advice to engage in investment transactions. I have no words. JK, I actually have a few thousand for y'all. I asked a question on Twitter a few days ago, wondering who would be the Lehman Brothers of crypto this credit cycle. Many said it would be FTX, and I honestly laughed it off. I never believed they would go down, and yet, here we are. The catalyst for their downfall is the same as it always is, a good business overextending themselves by gorging on cheap credit collateralized by high and rising valuations of assets on their balance sheet. And as money became more expensive and the cycle turned, their nakedness was exposed for all to see. This essay is a simple story. I shall narrate a play-by-play built around tweets and public statements. I intend to respectfully read between the lines and offer my opinion on how all this came to be and what the future holds. To that end, I believe the final down candle in this crypto bear market is near, and that we shall emerge from the bear market with less dead weight and more opportunity for those who survived. Before we begin, I sincerely believe that Sam Bankman-Fried is a one-in-a-generation trading talent. Even though he just blew up, the empire he put together took a certain amount of panache that is hard to come by. And I must give even more kudos to Baron CZ. When the news broke that Binance might acquire FTX, I sent CZ the following message. I freaking love you, man. Boss move. Much respect. So let's begin. It was all a dream. I used to read CoinDesk magazine. It all started with a CoinDesk article that featured a breakdown of a leaked Alameda research balance sheet. The financials made concrete what industry watchers already suspected. Alameda is big. As of June 30th, the company's assets amounted to $14.6 billion. Its single biggest asset is $3.6 billion of unlocked FTT tokens. The third largest entry on the asset side of the accounting ledger, a $2.16 billion pile of FTT collateral. There are more FTX tokens among its $8 billion of liabilities. $292 million of locked FTT. The liabilities are denominated by $7.4 billion of loans. It's fascinating to see that the majority of the net equity in Alameda business is actually FTX's own centrally controlled and printed out of thin air token, said Corey Klippenstein, CEO of investment platform Swan Bitcoin. Alameda CEO Caroline Ellison declined to comment. FTX didn't respond to a request for comment either. Other significant assets on the balance sheet included $3.37 billion of crypto held and large amounts of the Solana blockchain's native token, $292 million of unlocked Solana, $863 million of locked Solana, and $41 million of Solana collateral. Sam Bankman-Fried was an early investor in Solana. Other tokens mentioned by name are SRM, the token from Serum, the decentralized exchange Bankman-Fried co-founded, MAPS, Oxy, and FIDA. There is also $134 million of cash and equivalents and a $2 billion investment in equity securities. The majority of the assets on their balance sheet are illiquid FTT tokens and a bunch of shitcoins. Let's break down why FTT is so important to the FTX Alameda empire. Per FTT stated tokenomics, FTX has pledged to use 1/3 of all exchange fees to buy back FTT. SBF owns the majority of Alameda's equity, while he continuously dilutes his FTX ownership to ship capital from VC Muppets These VC Muppets probably didn't realize, or maybe they did, which is even worse for investors, that a good chunk of FTX's revenue was siphoned from FTX to Alameda through Alameda's large FTT stake. Presumably, Alameda's received a large allocation of FTT for providing essential market-making services to FTX and its participation in the FTT initial coin offering. Okay, so that's not ideal for FTX investors, but it isn't what struck the death blow to FTX. The real issue, which folks started to raise questions about in the wake of the CoinDesk article, was whether FTX loaned Alameda money, most likely USD or fiat stablecoins, and used Alameda's FTT stake as collateral. The FTX did loan the funds. That isn't inherently fatal issue either. FTX was free to loan out its retained earnings to whomever it pleased, but the most pressing related concern was whether FTX rehypothecated customer deposits to Alameda and took FTT as collateral, and as a subset of that, whether the fall in the value of FTT has some sort of value on the subset of crap coins on Alameda's balance sheet, would thus render Alameda insolvent. And finally, if Alameda became insolvent, would FTX lend money from clients' funds to prop it up? Again, these were the questions that people began asking after this article came out. Lucas Nuzzi basically was the one to say this. Then CZ struck. As a part of Binance's exit liquidity from FTX last year, Binance received roughly 2.1 billion USD, equivalent in cash, due to recent revelations that have come to light. Binance has decided to liquidate any remaining FTT on their books. We will try to do so in a way that minimizes market impact. Due to market conditions and limited liquidity, we expect this to take time and a few months to complete. Binance always encourages collaboration between industry players. Regarding any speculation as to whether this is a move against a competitor, it is not. Our industry is in its nuancy, and every time a project publicly fails, it hurts every user and every platform. Presumably, CZ read the same article as everybody else and decided to dump Binance's sizable FTT stake in the market. There was also apparently some beef between two crypto barons. Crypto baron Ryan Salim tweeted, "Been an absolute pleasure watching CZ Binance have the extremely difficult but transformative debates on Twitter this past week to ensure the crypto industry moves forward in the best way possible." To which SBF responded, "Excited to see him repping the industry in DC going forward? He is allowed to go to DC, right?" That's not very nice, Sam. CZ doesn't make love after divorce. It seemed reasonable. I guess CZ and SBF had a messy breakup. Once CZ started airing his concerns, the alarm bell started ringing in all the heads of FTX depositors. In crypto, when you even have an inkling that an exchange might be insolvent, you pull your funds immediately and ask questions later. Logic suggests that even if Alameda went bust, FTX should suffer no issues processing all the withdrawals. They are two separate companies, and according to SBF's claims, FTX's customer deposits were not reinvested, not even in super duper safe treasuries. At this point, there was no reason to believe SBF was lying, but even when, you ain't gonna wait around to find out your money's on the line. And therefore, capital started sprinting for the exits. As always, he who sells first sells best. Those who immediately withdrew their funds got them back quite quickly, but as Monday bled into Tuesday, FTX's withdrawal process crawled to a halt, and all the while, FTT continued to plunge in price. The market was clearly trying to sniff out whether there was an FTT margin call to trigger Alameda for overextending themselves. I woke up on Tuesday to many messages from friends spreading rumors speculating that FTX may have been playing funny with the customer money. I prayed to Lord Satoshi that FTX had not dipped their hands in the customer cookie jar, and then the bombshell hit the electromagnetic sphere. Hey all, I have a few announcements to make, SBF tweeted. Things have come full circle, and FTX's.com's first and last investors are the same. We have come to an agreement on a strategic transaction with Binance. This insane announcement provided probable answers for many questions. Did FTX rehypothecate customer funds or enthusiastically use said funds effectively? We don't have a definitive answer to this question, but Binance signed a non-binding letter of intent to purchase FTX, the entirety of FTX, and they pledged to attempt to make whole all customer deposits. That suggests that FTX experienced a run on its deposits and was unable to fill all the withdrawal requests of its customers. Otherwise, why would FTX need a bailout from Binance? FTX could have blown all their VC Muppet dry powder propping up Alameda, but that still wouldn't have impaired their ability to meet withdrawals unless they were dipping into the honeypot. Two big lessons that CZ posted were, number 1, never use a token you created as collateral, and number 2, don't borrow if you run a crypto business, don't use capital efficiency, have a large reserve. Two big lessons. I wonder what situation he could be referring to. CZ clearly seems to be insinuating that FTX may have done some improper things with customer funds, and thus, when the bank run happened, they were caught with their hands in the cookie jar. Over the last week, $6 billion of deposits fled FTX. This is what precipitated this awful turn of events. These are the only withdrawals that were processed. We do not know how many poor souls are still waiting for their money back. Is Alameda insolvent or bankrupt? We do not have a definitive answer to this question. However, if FTX required a bailout from Binance, and it was indeed needed because of financial help that FTX supposedly provided Alameda, then we can assume Alameda has probably done so as well. I'll leave you with these words from Caroline Ellison, CEO of Alameda. Nothing like regular amphetamine use to make you appreciate how dumb a lot of normal, non-medicated human experience is. The second dumbest thing, apparently there's about 20% of my brain that's dedicated to food. Whatever else is happening throughout the day, it's just a significant percentage of thoughts dedicated to what I should do for dinner. How about dessert? Should I have an afternoon snack before that? You know what's good. Ethiopian food. Do they even have that in Hong Kong? I am sure she is dedicating 100% of her brain to salvage whatever she can to Alameda. Will the deal actually close? A non-binding LOI is nice, but a firm commitment by Binance to purchase FTX is nicer. I imagine that the Binance's corporate finance folks are busy digging through the financials of FTX and Alameda. If the hole is too big, then I expect Binance will walk away from the deal, and if Binance can't or won't do the deal, no one will be able to swallow the losses billowing from FTX. So what happens if FTX can't find a new home? Similar to Mt. Gox, we will probably enter yet another high-profile bankruptcy situation where depositors queue up to recover what they can. This could be a long or short process, but given how complex I imagine the holdings of FTX to be, recovery of any portion of deposits will likely take a very long time. That is obviously a tragedy in and of itself, but when looking at the broader market impact, the even bigger question is, which companies that run crypto loan books had exposure to FTX and or Alameda? SBF was the most pristine credit in all of crypto. He was the IT crypto pioneer. His beautiful cherub visage adorned the most prestigious mainstream financial magazines. His skin glistened like someone who only ate carrots and cucumbers. He could do no wrong. Investing alongside anything SBF touched was a pure way to riches. Look at that Solana boom. SBF even got Tom Brady to YOLO. You can therefore imagine that if FTX potentially used customer funds to save Alameda, that both entities probably cashed in on their sterling reputation to borrow as much money as they could in order to stay alive in their dying months. And therefore, it is very possible that this possible default has already infected the loan books of the remaining major centralized lenders. In light of this potentially significant exposure, the question becomes, can the largest centralized lender survive? 1. Can't stop, won't stop Jerome Powell, who was determined to break inflation by continuing to raise short-term interest rates by reducing the size of the Fed's balance sheet. 2. The implosion of Luna. 3. The bankruptcy of Three Arrows Capital. And 4. The possible bankruptcy of FTX and Alameda. Issues 1 through 3 already deaded legendary centralized lenders such as Celsius, BlockFi, and Voyager. There are few possible zombies remaining. I will not name them here, but anyone who thinks critically can surmise who might come under pressure next. FTX and Alameda biting the dust is bad enough. That is our Lehman Brothers. But who is our AIG? Who is Countrywide, Fannie Mae, and Freddie Mac? Anyone? Oh, they are out there hiding in plain sight. The bottom of the S&P 500 during the 2008 global financial crisis wasn't reached until March 2009. That was many months after Lehman Brothers went bankrupt, and every single independent U.S. investment bank received money from Warren Buffett or was gobbled up by a commercial bank who could legally access the Fed's discount window. It was after Treasury Secretary Paulson supposedly bent the knee to Congresswoman Nancy Pelosi in order to secure the passage of the Troubled Asset Relief Program, aka let's print some money and hand it to the banksters. And finally, it was after Nobel lecturer Ben Helicopter Money Bernanke announced the Fed would engage in quantitative easing. While I am supremely bullish on the prospects of crypto in 2023, I know the date keeps slipping, but I reserve the right to change my mind in the face of market conditions. I believe we are about to trade to new lows as everyone wonders which crypto household name will go bankrupt next for lending money to FTX. Bitcoin wigged down almost to 17,500 on BitMEX's XBT USD perpetual swap. On various other spot exchanges, Bitcoin experienced similar falls to closer levels to 17,000. Get ready for lower for longer because it's coming. But the good thing about crypto is that no central bank will be riding to the rescue with freshly printed fiat crap coins to bolster the finance sheets of reckless companies. The crypto industry will be forced to devour its humble pie quickly, leading to a speedy recovery that leaves it stronger than ever. Before I end this essay, let me be clear. Centralized exchanges will always face these issues of mistrust on behalf of their customers. FTX was not the first high-profile exchange to fail, and it won't be the last. But throughout all of this, blocks on the Bitcoin, Ethereum, and all other blockchains were still produced and verified. Decentralized money and finance have and will continue to survive and thrive in the face of failures of centralized entities. Thank you.